Assalamualaikum and a good day to everyone. Okay, so today we're going to learn chapter 1, Introduction to Cost and Management Accounting. So let's begin. So as you can see from this slide, we have two objectives that we must achieve while learning chapter 1. First, being able to identify the differences between cost management and financial accounting. Second is to explain cost concept and terminology and cost classification. Okay, so we start with the differentiation of cost management and financial accounting first. Okay, just as I explained to you guys in our first meeting, in accounting there are actually two sides using the accounting information, which is the inside and the outside. But they are using two different types of information that caters to different users. In the inside, cost and management accounting, which are information that are made by the employees, they are used by the managers to make decision making. Only within the company, the information is shared within the company. They are used by managers, directors to make decision for the business. While the outside part, which are called financial accounting, information are made for external users. Okay, so there are different information from the cost and management accounting. The information that portrays the business transaction, that portrays the business economical transaction for the external users to use to make decisions. So example of external users are shareholders, creditors, which are people that is regarding to our debts, or government, such as the tax regulation. They will view that financial statement, which is under financial accounting, to see our yearly or quarterly transaction. Understand? Good. So that's just a bit of overview of two sides of accounting. I'll go into detail further in our slide. So let's move on. Okay, so in this slide, you can see the definition for cost accounting and management accounting. So even though both of these accounting are for the inside of the company, they have different concept, different focus for each of these two accountings. That's why their naming are also different. So let's look at cost accounting first, which is defined according to the Chartered Institute of Management Accountants, CIMA. Okay, the application of accounting and cost principle methods and techniques in the ascertainment of costs and analysis of saving and or assets as compared with previous experience or standard. So while for management accounting, also according to CIMA, the application of professional knowledge and skill in the preparation and presentation of accounting information in such a way as to assist management in the formulation of policies and in planning and control of operation of the undertaking. So as you can see, the overall definition is different, of course, but you can see their focus is also different. So this management accounting is the accounting information in such a way to assist the management in formulating policies and in planning and control of operation of the undertaking. While for cost accounting is application of accounting and cost principle methods technique in a settlement of cost analysis of saving or excess as compared with previous experience or standard. These are regarding costs. They are used for costing. Analyzing costing based on previous records and histories. And then next, the information will be used by the management to formulate policies and planning and control of operation. And you can see that even though that's for the inside, we start with cost accounting first, and then the information will go to management accounting. So in the next slide, you can see the actual flow. See, first you will calculate the cost, make a statement, a budget. Then the budget will be used by the management for decision making and planning. Okay, lastly, management accounting information system in the organization. So the flow is like this. You will start by making the information. Then the information will be used by the management to conduct decision making. And the decision making is for the system in the business. Understand? Okay, so let's move on to the next slide. Okay, so in this slide you can see it is the importance of cost accounting. Okay, there are three importance of cost accounting. First is for the estimate of costs, which are to ensure the costs are assigned to respective departments and who is responsible for the allocated costs. We have to ensure the allocation to the departments are correct so that waste will not happen. Second is for planning purpose, which is through cost, the business may prepare activities or plan or target or goal to be achieved. For example, Department A targets to achieve sale around 30,000 this month. So they can use the budgeted cost information for a specific goal. Third is controlling the resource in the business. Make comparison with actual costs incurred with the planned costs. Corrective action can be made to ensure the activity or plan can be carried out within the planned costs. Okay, so you can compare between the actual and the planned costs or budgeted costs, the estimated costs. You can compare and plan for a better strategy for the business. Okay, so let's move on to the next slide. Okay, now we'll focus on financial accounting, which are for the external users. Different from cost and management accounting. So the definition for financial accounting is the art of classifying, recording, summarizing transaction and business event in monetary terms and interpreting the result to interested parties, users, enable them to make decision. Okay, so different. For financial accounting, we use information to summarize it in a record and interpret it for outside users. Okay, so next, so these are the differences between management and financial accounting. You can see that there are many differences between the two accounts because they focus on two different things, two different scope, two different uses. Okay, so the first one is scope of accounting information system. Management accounting focus on future orientation, while financial accounting is historical. So what does it mean? Financial accounting is future oriented. So the information that is made but within the management accounting, they are used for future plans. It is for future strategy, future decision making, and they are budgeted. The information that are made are only budgeted or estimated information. They are not the actual information. They are used for future plans. Okay, while for financial accounting, they use information that is already happened, actual information. They portray the actual information in a financial statement. Okay, so this is only estimation, while historical use actual information and displayed in a statement. While reporting information, the second one is reporting information. This one, okay, so that is the first one. It summarizes information, while financial accounting has detailed information. So in management accounting, you summarize the information that is made for planning, while financial accounting, you detail out the actual transaction that happens. Okay, so as I stated before, the third one, users, they focus on different users. Management accounting focus on internal users, while financial accounting focus on external users. Okay, the fourth one is regulatory requirements. So management accounting is flexible or no requirement. They don't have any standard, they don't have any rule to follow. They just do the information that is needed. While for financial accounting, you must comply with the requirements such as Company Act, financial standards, and GAAP when preparing financial statement. So for Malaysia, we ourselves has our own standard, which is called the MFRS, Malaysia Financial Reporting Standard. Okay, so the financial statement must follow this standard in Malaysia. So why for financial accounting you have to follow a standard? Because if you look at the bursa and you can find different companies' financial statement, all the financial statement are used that are there in the bursa. You can use to compare. You can compare company A and company B because they follow the same standards, the same rule. Only the information are different because they are based on the company's performance. Okay, they are made so that outside users, such as a person that wants to buy a share, can compare two different companies with the same standard. If each company use different standard, the external users will be confused. They don't know which to focus. Okay, while for the management accounting, only inside users will use, the employees, the management. So they don't need any specific standard because they don't have to compare the information with outside company. They just use it for their own business. Okay, so let's move on. The fifth, which is reporting frequency. They are done when needed. So when the manager needs information, the employee must follow. So whenever it's needed. While for the financial accounting, well-defined schedule, for example yearly or quarterly. They have to report their performance yearly or quarterly. Usually yearly lah by a business. This is compulsory, wajib. They have to follow the rule. Yearly or quarterly must report. So the sixth is content of reporting segments. It is depending on departments. Department A will use different information. Department B will produce different information because they focus on their own department. While financial accounting is a whole. It focuses on the whole business. The financial reporting will focus on company A. The financial reporting will focus on company B. One company. Okay, you cannot make two companies within one financial statement except if it's a mother or like mother and son company. Okay. The seventh is types of information, both financial and non-financial information for internal decision making. So they can use both numbers or information in words for their statement. While for financial accounting, financial information supported by notes to account for external users. Mostly numbers values are shown in the statement. Okay, different. One is used both. Lastly, the eighth differences is the purpose. The management accounting provides information for stock value, decision making, planning and control, while financial accounting provides information on the financial position of an enterprise business. Okay, so that's the 8 differences between management and financial account. Okay, so let's go next. Okay, now so we go into our second part, which is to know the cost concept and cost terminology. Okay, under cost classification. So let's begin. Cost classification can be classified under 5 names. First, element or nature. Second is traceability, function, behavior, and period-based product cost. Okay, let's go one by one. First is element. Cost can be classified according to its element or nature, meaning the cost is classified into a group that has the same function, the same nature as them. Okay, so it can be classified into materials, which is cost of product ingredient in making a product. Example, in making bread, the cost of material is flour. Okay. The second group is labor. So cost or charge for a person. Okay, so this is a person, the material is the ingredient, who is responsible to transform the material into a product. Example, in making bread, the salary of a baker will be the labor cost. So for labor is the people that involved in making the product. So lastly is expense. The other costs are other which are not material. and also not labor. Okay, that's what it means by other cost spent in making a product. So example like electricity costs in the bread factory, which are called as indirect expenses. Okay, example is electric cost. It is needed, but they are not material and they are not labor. So you can classify the element into these three things. So next, which is traceability. The cost of product can also be grouped according to its traceability to a product. Okay, so first traceability is direct cost. All costs incurred directly traced in making a product. Example, direct cost, direct labor cost, direct material cost, direct labor cost. Okay, so directly trace. So using the example from the previous slide, which is the bread. From the bread, what are the material that you can see? You can see physically and you know it's in the bread. There is trace, which can be traced. So for example is flour. So it is a direct material. You know flour is needed when you are making bread. So direct labor. Direct labor. You know that making bread, baker is needed. So baker is the direct labor. You can expect a cashier to make bread, right? Okay, so when you plus direct material cost, direct labor cost, direct expense, which are not material or labor but can directly be traced to the product, they are called prime cost. Okay. Okay, so the second category is indirect cost. Cost which is difficult to be traced or charged to one unit of product, also known as overhead. Okay, overhead is indirect cost. So example is indirect material cost and indirect labor cost. So using the bread example, indirect material cost would be any material that is not directly traced to the bread, such as they might use water to make the bread. That cannot be traced. You don't know that. Difficult to trace water. So indirect labor, they might have an assistant in making the bread. We don't know that. So it's indirect labor, which is difficult to trace. Susah kita nak tahu dia ada involved in the production making. So when you put prime cost, which is direct material, direct labor, direct expenses, plus overhead, it is called production cost. Okay, any cost involved in production is production cost. Understand? Okay, so let's move on to the third category, which is function. You group the cost depending on its function. So the first is production cost. Of course, costs involved in making a product or in production, meaning in the factory, production factory only. So because it's production, it doesn't involve anything else. So we'll have direct material, assembly cost. Assembly cost is also non-direct labor. Anything that is involved in the factory, it is in the making of the product, it's under production cost. So the second is non-production cost, which is other costs which is not involved directly in making a product. So we have administration department cost, We have marketing, selling and distribution costs. The marketing for selling the product. So example like cost of advertisement. The third is research and development costs, such as cost of testing a product. Lastly is finance costs, cost of borrowing for the business, such as interest on loan. So anything that is not involved in the factory, it is the non-production cost. Okay, so next we have behavior. Okay, behavior is a cost that can be grouped according to its response to the volume of product. Volume of the product. Okay, so the production of the items that the business is trying to do. So we have first behavior, we have variable costs, costs that may change, that constantly change as the volume of the product change. So it's not fixed, it's always changing. It's either always go up, always going down. Not static, always moving. Okay. Second is fixed costs, which is cost that may change, that may not change as the volume of the product change. This one, opposite from the variable cost, it is a cost that constantly static, never move, such as the rent of the factory. This January is 2000, February is still 2000, March is still 2000. It's 2000 until the end of the year, constant. That is fixed cost. Okay, different from variable costs, such as the cost of the flour may increase as the volume of bread produced. So the cost of the flour may change due to inflation, due to rise in price, anything that causes the flour, the material price to go up, it will make the bread cost go up. Okay, so the third one is fixed costs, costs which may have combination of variable and fixed. So they has both variable and fixed costs. Such example is postpaid telephone bill. The rent of the telephone is fixed, but the outgoing call is variable. Okay, so example ini you all boleh tengok macam telefon rumah kita. Telefon rumah kita tu kita sewa. Harga sewa tu constantly sama every month. Tapi harga untuk kita call tu berbeza. Itu variable. Tapi sewa telefon itu fixed. Okay. So the rental of the phone is fixed every month, but the constant calling, the outbound call that you always use is variable. Okay, so lastly is step cost. Cost that may remain constant on certain level of output but increase later when the output increase to the next level. So parking fees, example parking fees 0.42 per hours, it's 4 ringgit for next 2 hours. So step cost is like stairs. They go one by one. They go up one by one. See, like this. You go up one by one. They don't directly go up like variable. They go slowly, one step to another step. Okay. So the next one is the graph for the cost. So you can see variable always go up. So if you look at the graph itself, they show visually the cost. So when the price is 1 ringgit, the item will be 10. But when the price is 2 ringgit, the cost will be 20, like that, constantly. While for fixed cost, even though it's 1, it might be 10, it might be 20, but the price is still 1. So the fixed cost, you have both the variable and the fixed. While start cost, you go one level at a time. Okay. So next slide is period cost and waste product cost. So period cost is cost which is not directly associated in making a product. It is occurred day-to-day business activity to generate revenues which will be charged to the profit or loss. In other words, it is a non-production. Okay, so it is the like admin or marketing, the R&D. Okay, so the second one is product cost, product directly associated in making a product, also known as manufacturing costs or factory costs. This cost will be included in inventory value of a product which will be recorded under cost of sale statement, profit or loss. In other words, it is production cost. Okay. So the conclusion is cost accounting is important for business to know how much they may spend to produce a product. Furthermore, the business may also know the amount of that may affect the product inventory value to be recorded in cost of goods sold in the income statement. Okay, so that is all. The end. Please give any question if you don't understand. Thank you.